What's up, guys? Today is Sunday, September 10th, and this is the first of the weekly recaps that we'll be doing. So every weekend, we'll be doing a review of the trades or any official trades that have been taken or that were taken during the week. And we'll talk about the strategies that were used, the confluences, and all. So for the first week of September, if you guys look at this spreadsheet, and this is a spreadsheet that tracks all the returns, all the trades we take either on the live sessions or the trades I send in the Discord. And looking at our Discord, the live trades I normally send in are either in the indices channel, commodities, or Forex majors. So for example, like how an official trade is, when I send out an official trade, I will say I'm taking this trade. I'll set the, let me show you guys the parameters like an example. So for example, this one, that was on the live session. Let's see if we can find an official trade. Okay, so for example, this one, sending this as an official trade, price is back. So US 30 sell based off of reversal indicator for 200 pips TP, 200 pips stop loss with a 1% risk. So an official trade from me will always have the entry and also the confluence of strategies, or whether it's a reversal strategy or any of our other strategies, it will have a TP and stop loss, and then it will have the associated risk with it. Now, there are other trades that are sent in the group, either in the general channel or in the trade ideas channel, but this is just either trades that members or even myself are looking at, and if they do validate, that's some trades people can take. But for me, what I consider official trades, I will always say I'm taking this trade based off of this strategy, and this is my TP and stop loss, this is my risk to reward, and this is the risk for that trade. But anyway, so looking at the first week of September, we had a trade that ended up at break even. So B here refers to break even. So this is September 1st. So for that trade, if I look into the Discord, or if I look in the Discord, this trade September 1st, I believe it was US 30 trade. So this trade right here. So it was a filler trade. So filler trades are ideally like trades that have a small lot size. And for filler trades, we normally look to risk between 0.125% or 0.25% per trade. So this is the trade right here. Looks like this was on the 1 minute. So let me see if I can go back here. So this was right here. And this was on the 1 minute, September 1st. So we can go back to US 30 on that day, September 1st. Let's see. And we'll try and see what we were looking at. Okay, somewhere around here. It might have been, no, it wasn't this trade. Give me 1 second. Let me reduce this lines right here. Perfect. So September 1st, it was on the 1 minute time frame. Let's reset this. Just a second. Let's see if we can find those. September 1st. Okay. Okay, Friday, September 1st. Let me check something here real quick. Not sure why this here indicator is acting up. Let me try and reapply it. Oh, I think I know. I know why. Okay, I think I know why it doesn't go back that far. Okay, that makes sense. Let's see. Okay. Goes to Thursday. Okay, so we might not be able to do it on the 1 minute. The reason for that, so this strategy that we're focusing on nowadays is the parabolic SAR strategy. And the only limitation with that strategy is that per trading views limits, the parabolic zones can only go back to about 500 candles. So since I can tell this entry was on the 1 minute, because here you guys can see this time frame right here was 1, so we wouldn't be able to see this. But ideally, how we start the day off, and I can recreate it, or say on the 1 hour time frame, and I can see this, we were looking for a buy. So ideally, personally, I use the daily. So we have all of our indicators. So we have a bunch of indicators right here. So if I go back, I'll show you guys all these indicators we have. So we have the ASEMA 4 indicator. We really don't use this one anymore. We have the breakout scanner. We have the crosses indicator. We have the high-low plus trend. We have the markups indicator. We have the reversal indicator. And then we have the zones indicator. So let me just give you guys a brief of them. So the reversal indicator is perfect for catching reversals after a trend. The markups indicator, so you can see the reversal indicator right here. It's better to see it on a higher time frame, because keep in mind, again, this is on the this is on the 1 minute time frame. So for example, let me give you guys a look into the reversal indicator. This is for US 30. And again, this is on the daily time frame. So this reversal indicator can help you catch a trend or catch the reversal of a trend. So you can see this is on the daily time frame. And you can see this here is the year 2023. This is 2022. So ideally, what you're looking for, even with indicators out there, is indicators that, of course, sell high and buy low. So one good thing about the reversal indicator is that it's giving you those entries, right? Buys at the lows and sells ideally at the highs. But anyway, I don't advocate using indicators blindly. I do advocate for some sort of manual intervention. So that's the reversal indicator. Then we have the markups indicator. The markups indicator ideally marks up order block levels. So here, if I move, for example, to the 30-minute or 15-minute time frame, you guys will be able to see that, right? So we have a bullish order block right here. We have a daily bullish order block. We have an hourly bullish order block, 15-minute bullish order block, etc. So I know there are people out there who trade with order blocks. So one of our indicators is an order block indicator. Zones indicator, this just shows us where buyers are sitting in the market and where sellers are sitting. So of course, here in this chart, the sellers is the red zones, the buyers is in the red zones. So previously, before we started focusing on the SAR strategy, we were focusing on the zones and markups strategies. So ideally, if we were selling, if we had an order block, a bearish order block, we would want to see sellers sitting around that order block. Now, if we were looking to buy and we had, for example, this daily bullish order block, and you can see here US 30 exactly rejected from this daily bullish order block exactly to the pip right here, we would have wanted to see buyers sitting here, and you can see this concentration of buyers that are there. So ideally, before even we started using or focusing on the SAR strategy, we were focusing on the zones and markups strategies. The high-low plus trend, ideally for that, I know for this one, the high-low plus trend, I had it pegged on the SARs, but ideally the high-low plus trend, we have this, right? It just gives you like the high-low periods, and that's pretty much it, and also can help you identify the trend. Also, it has buy and sell signals built in. Now, one thing for all of the, I'll put this back the way it was. For all of the indicators that we have, for all of the indicators we have the time filter that's built in. So for example, you guys can see the time filter here. So we have a time filter built into all of our indicators, and we have buy and sell signals for most of the indicators, other than of course the zones and the order block indicators, because those just show you levels. But for all other indicators, we have buy and sell signals. So I know there are folks out there who trade using signals. Personally, I don't really advocate for people to peg their trading on signals, because again, nothing is 100%. But if you can use that signal in conjunction with some of your other confluences, those entries for these indicators are pretty accurate. So those are some. The other indicators we have this. So this is the crosses indicator. So this is one of our highly profitable indicators. So it looks for crosses in a fast moving MA or EMA and a slow moving EMA, and also checks for, again, rejections. So you can see, for example, here, and again, for this particular one, let me see, I think I have the strategies or how to use this. So if we go here and look at the crosses indicator, crosses strategy, use on 15-minute time frame and higher for better results. Use on fast moving instruments, US 30, NAS or gold. Look for the golden cross, death cross, or secondary crosses. And again, first 3 to 4 trades, including original cross, are highly profitable. So for example, here, the first cross right here in this sell trend was this death cross. So death cross is ideally when a fast moving EMA or moving average or fast moving average crosses a slow moving average to the downside. So for example, here, normally for us, we use the 9 EMA and the 200 EMA. So when the 9 EMA crossed the 200 to the downside here, you see we had this death cross right here. And you can see from then on, price has just been trending downside. So if you're using this strategy, you can see that, again, first 3 to 4 trades. So the first one, the death cross, second trade, which is a secondary cross, 2, 3, 4, you can see they would have been highly profitable and would have hit full TP. So ideally, you want to focus on those. I don't recommend chasing after the fifth one, but we've had instances where 24 back-to-back trades, I think they were buys. So if it's a buy, it's a golden cross. So a golden cross is when a fast-moving EMA crosses a slower moving one to the upside. So we had an instance where after a golden cross, that golden cross and all the secondary buys that fired after that, for 24 of them, only 2 would have hit stop loss. So you had 22 back-to-back buys that would have hit full TP. But again, I don't recommend chasing that. I just recommend doing the first 3 to 4 and then waiting for the change up. But again, this is another one. So this is on US 30. If we look at it on gold, we should see a similar result right here, right? So after this sell happened, there's this. Now, one thing to keep in mind, which is another reason why we have the time filter in here, is that you, based off of my back testing and based off of the strategies that I teach the members in my community, you want to avoid trades between 3 p.m. to 11 p.m. Eastern Standard Time. So that's mid New York, or towards the end of New York, to all the way to mid Asia. So the reason for this is that during that time you have a high probability of being faked out or manipulated. So you want to avoid trading during those times. Also, there's low liquidity in the market. The other time you want to be cautious of course, is before New York Open. So I would say 30 minutes before New York Open. So New York session starts every day or every weekday at 9:30 a.m. Eastern Standard Time. So you really don't want to be trading between 9 a.m. to 9:30. So you want to wait for the New York session to start, and then you start looking for trades. I would say about 15 minutes after New York Open. So maybe 9:45 or 10 a.m. Eastern Standard Time through to like 2 p.m. or 3 p.m. The other time you want to be cautious of is about 5 a.m. Eastern Standard Time, which is 2 hours after London Open. London Open normally happens about 3 a.m. Eastern Standard Time. So about 5 a.m. Eastern Standard Time, I've noticed in the past, you also have quite a good amount of manipulation or fake outs. So you want to be cautious about those times. So again, this is a crosses indicator. Again, you can use it on any instrument. So here I showed you guys for gold, US 30. You can also use it on stocks. So for example, here, if we were to put it on Apple, you can see, right? So you can use any of our indicators with any instrument that's out there on TradingView. So I'll just put this back to US 30. This right here is our breakout scanner. So what the breakout scanner shows us, we have access to all this. There's a bunch of instruments you can trade on TradingView, but these are just some of them that are coded into the indicator. So it just tells you out here if an instrument is breaking out based off of the time frame you put in here. And again, you can use the breakout scanner to enter into trades based off of the confluences. And I went over the reversal indicator. So this is again the reversal indicator. But anyway, those are just some of the strategies we have. So in a nutshell, we have the crosses indicator strategy, or the crosses strategy. We have the markups strategy, markups plus zone strategy. We have the high-low plus trend strategy. We have the, what is it? The trend line. And we have the breakout scanner. So we have a bunch of strategies that you can find what works for you and you stick to it. If you're just coming in, or if you're already part of us, you know that I've advocated for you to learn one strategy at a time. Even for right now, when we are, and that's what we'll go over today, we are focusing on the SAR strategy. So we are not really tying the SAR strategy to other strategies out there, because if you try to tie them together and you haven't really understood all of them, it might jumble you up, or it might confuse you. So the strategy we are focusing on nowadays is the SAR strategy. So that's parabolic SAR strategy. And if you look it up, there's a bunch of documentation out there. But what we did for us is that we just found a way to refine it, and we introduced or built this into all of our indicators that are out there. So all of our indicators, so the crosses indicator, the reversal indicator, the breakout indicator, all of them have the SAR strategy that's built in. Now, every day in the market, we look for the daily bias so that we know whether we are looking for either buys or either sells. Now, I know there's a bunch of different ways out there that you guys can try and find a daily bias. For me, I use the SAR strategy. So what I do it on the daily. So I apply, so for example, here I'm just using the reversal indicator, but I've turned off everything else in the reversal indicator and then only left the SAR inputs. So here I want both the green and red lines, and I only want to extend it for 5 candles. So what I look for here in the daily bias is what is the last, or what SAR level did the last daily candle close above or close below? So if we were to look at it here for US 30, the last SAR US 30 closed above or below was this green SAR. So green SAR is, to me, a buy SAR, or a buy, shows your biases for a buy. So that's for US 30. So currently I am bullish on US 30 because the last daily closure of an SAR was bullish. Now for gold, I am bearish because the last closure, and in this case it was below, was a red SAR or a sell SAR. Same thing for EU, same thing for, now for the dollar, I'm bullish on the dollar because the last daily closure was bullish. Now, personally, I focus on US 30, gold, and EU. I just, those are the three instruments that I mostly trade, but you can use the same logic for any other instrument that you trade out there. Right now, I've started incorporating the reversal indicator into this. So if I'm bullish on US 30, I will come in here and then I would turn on only buys in this reversal indicator. Again, you don't have to use the reversal indicator for this. You can use the crosses, you can use the high-low plus trend, and then you can turn everything off, because keep in mind, all of the indicators have the SAR strategy or settings built into them. So it doesn't matter which one you really want to use. Previously, I was using the high-low plus trend, but I'm testing something out because I've seen if you look at, for example, this is the reversal indicator on the daily time frame for US 30, you can see these entries right here that most of them are pretty accurate. Same thing for gold right here. This is, again, the reversal indicator right there. Same thing for the dollar. So you can see. So I am just using the reversal indicator, and then if I'm bullish on something, I'll turn on buys. Here I'm bearish on gold, so you can see if we went to the reversal indicator, I've only turned on the sells only. But again, you don't even have to do the buys or sells, because previously I just was using the SAR by itself. So this is just something new that I am testing going forward. Now, knowing that, if I look back at this trade that we took on September 1st, then the next thing I would do, if I am bullish, so that was a US 30 trade. So if I am bullish on US 30, I would then come in here, and then the same thing, right? Same indicator, but the only difference is I would extend the lines right here. So keep in mind, the value you put in here is how far or how many candles the SAR is going to extend to, which is why we couldn't go back to the 1 minute that we're trying to get to, because it's past like 500 1-minute candles, so we can't go back that far. So here, if I put 5, you'll see these lines here decreasing. If I were to hide those lines that I've drawn, so you can see here, right? So the lines decreased right here. Now, if I were to extend it back here, so this is, I'm telling it to extend for 500 candles. You'll see those lines extending. Now, what then I would do in here, if I am bullish, so for example, right there for US 30 on that particular day, I was bullish, I would start on the 4-hour time frame, and then I would look for zones where US 30 has at least double SARs. Now, what do I mean by double SAR? I mean a zone where there's 2 lines in the direction of my bias that are close together. So in this instance, you can see here that this is a double SAR. So it can be a double, it can be a triple, it can be a quadruple. But ideally, you want to focus on the double. Yes, I'm pretty sure there's a way you can use the singles, but those areas where you have those SARs concentrated give you a higher probability. So what I would then do is box those areas in. So I would come in here, pick up this rectangle, and I know once I start drawing, the others will come back in there. But ideally, I would come in there, and you can see I'd already boxed it. So I would box in any zones that have at least double SARs and then box them in. So again, if I'm bullish, I highlight them as green. If I'm bearish, I highlight them as red. So I'll do that on the 4-hour. And then I'll do the same thing on the 1 hour. So for example, here you can see this is boxed in, but even if we're in the 4-hour time frame, of course, you can see we don't have any doubles. But I'm pretty sure if we change this to the 1 hour, you'll see them in there. So let me just go ahead and delete all of them in here and do it from scratch so that you guys can see that. So I am bullish. So I start here. My daily bias is bullish. I come in here. Then I start on the 4-hour time frame. So I come in here. I make sure that, so you can turn on both red and green lines or bullish and bearish lines, but you can see, you can look for trades in both directions. But for me, I'm looking to only trade in the direction of bias. So here, I would come in here, and since I'm only bullish for US 30, I would turn on only the green lines. So turn off the red ones, make sure that it's extended here. So the only time frames I don't extend are the daily time frame and also the 5-minute time frames. So you'll see there. So let's start doing the markup right here. So here, this is a double SAR. So it come in here. Actually, this I think is even a triple SAR. So you want to make sure that the lines are close together. So this one is only like 12 pips difference. So I would box this in right there. Perfect. Right there. Change something in here. So there's that. And then, so that's the 4-hour time frame. So I see another one right here. So I'll box that in. So that's a double SAR. And then I'll go back to where I was. I can see this is a double bullish SAR. I would box this in. And I'll give you guys the reason why I'm doing this. So on the 4-hour time frames, it's only those. So what I'm telling myself is that I am not going to look for any buys until it gets to this zone. So I'm just identifying my buy areas. So I'll do that. Then I come to the 1 hour and I do the same thing. So in the 1 hour, you guys can see here, this is a triple SAR. So I'll come in there and I'll do this. And then I can see a double SAR 430. Yeah, so this is only like 6 pip difference. So you want to look for the ones that are close together. So let's see. So perfect. So this is the 1 hour time frame. Let's see, we have some up here, which are here. Perfect. Let me see if it's 6. Okay. So perfect right there. Give me 1 second, make sure I got all of them. Okay. Now, what this is telling me is that since I'm looking for buys, I will only buy if price gets there. And this is the same logic for the sells, right? So the same thing I identify. So you can see here, my daily bias on gold is a sell. So I came here on gold and I identified those zones on the 4 hour and 1 hour. Now you can do it on the 30-minute too if you want. You can do it on the 15-minute as well if you want. But for me, I find that the hourly and the 4-hour time frames give a higher probability. Now it does give you fewer trades during the week, but it gives you high probable trades. Now, if you want a couple more trades, you can do the same markups down to the 15-minute and 30-minute time frames. Now, for entry, how do we go about entry? Now, there's two types of entries. Now, the first one would be what I consider a break and continuation. Now, what do I mean by break and continuation? Now, for example, for all my entries, I have to have 2 candles. So 2 candle confirmation. So if it's a area I've highlighted, so for example here, let's go for example with this. So if I was looking for buys here during this triple SAR zone. Now I need 2 candles. Now, if it's a buy and my zones are above price, so let's go ahead and replay this real quick right here. Now, in this particular case, this is an hourly candle. Now, what I would have been looking at here is price reaction around this zone. Now, for me to enter a trade in this zone, I would need a break and continuation. Now, what that means is that you need And keep in mind, it's in the same time frame you marked up. So for example, right here, I can tell, even though this zone is boxed up, you don't see any SARs by SARs there, right? So this means that this zone was in the 4 hour, because if we go down here to the 4 hour, you'll see those double SARs. Now let's look at, so let's actually first start using this 4 hour. Now, in this instance right here, let's even replay it more. So let me go back here and replay this. Okay, perfect. Now let's say we had marked up this. So what this is telling me is that if price, now this zone is above where price is, and I'm looking for a buy. So if I'm looking for a buy and my buy zone that I've boxed in is above price, what I'm looking for is a break and continuation. That's if it's a buy. Now, on the flip side, if a zone that I've marked up is below price and I'm looking for a sell, that would also be a break and continuation. So you can see how you can have a break and continuation on a buy and a break and continuation for a sell. For you to have a break and continuation for a buy, price has to be above where price is. The zones, entry zones have to be, or the zones of interest have to be above where price is. Now, this is what I mean by zones of interest, the areas you've highlighted. For you to have a break and continuation for a sell, the zones of interest have to be where price is. Now, this is on the 4 hour time frame. If we're looking for buys right here, we need 2 4 hour candles to close. So we need a 4 hour candle to break and close above this zone. And then we need the next 4 hour candle to also continue. So it can retest this zone and close above. So in short, we need 2 consecutive 4 hour candles to close above here. So if we keep playing this, and let's see if we get that. And I think we did get it. Okay, so we would need this 4 hour candle to close above there, and I think it did, right? So it closed above there, and then also the next 4 hour candle closed above there. Now, of course, this was a Friday and end of the week, but this would have been a valid entry right here. If the market was continuing, I would have looked. And again, keep in mind, personally, I don't trade between 3 p.m. Eastern Standard Time to 11 p.m. Eastern Standard Time. So unfortunately, so let's assume this trade did not come. So of course it came during the hours I don't trade. So the close of this candle came at 5 p.m., which was when the market closes, 5 p.m. Eastern Standard Time. But let's assume this candle closed, and we can look for examples that the time lines up with what we traded. I would have entered the buy, because keep in mind, break and continuation. Ideally, with the continuation candle, you want it to also retest the SARs you're trading. Now, if I put the, let me put the strategy, the parabolic SAR strategy here for you guys. Parabolic SAR strategy. Let me just put it on here. Let's see. I don't know if it's going to fit in here. We might have to put it. Okay. So parabolic SAR, let me just put it on this screen. So parabolic SAR, suitable for scalping and early entries at lower time frames. Best if used on the 15-minute time frame and above. So again, always have a bias from a higher time frame. So our bias comes from the daily time frame, right? So that's one thing we're looking at. Identify double SAR zones on the 4 hour and 1 hour time frames. So double SARs, triple SARs, or quadruple SARs. So again, these offer optimal entries for swing trades. Again, right, since your entries are on the 4 hour and 1 hour time frame, this would ideally be swing trades or intraday trades, because they might take an hour or two to hit full TP. But again, this entry confluences or ideas are similar if you're using them on the 5 minute, for which is, you can use it for scalping, or even on the 1 minute. Now here the entry would be this, but I want us to focus on item number 7. Set stop loss below or above the parabolic line depending on the direction. Now again, a better stop loss may be below or above the previous high-low period. And also note that parabolic lines can act as reversal points. Now, I'll go ahead and clear that. So here, if we were to enter this trade, let's say there was another candle that opened. If we entered this trade, we would have wanted our stop loss to be below this double SAR, which is the SAR that we are trading, or below the high low, which would be the low of this previous candle. Now, ideally, if you're using this strategy, you want to have like a 1:2 risk to reward. So in this instance, if you use this, you would have had like 80, is that 85? About an 80, yeah, 85 pip 85 pip stop loss. Now for you to have a 1:2 in this instance, you would have needed double that, so which is a 170 pip TP, right? So you can see how high this is. Now for me, I just prefer to put my stop loss below the SARs that I'm trading, and that will give you a nice, so if you're doing this, I know again this is an anomaly because it was when the market closed, but ideally it's the same idea if you are trading when the market has not closed, and you're trying to also make sure you're not trading during manipulation hours. So for me, for US30, I try to have a 50 pip stop loss, and I normally go for 100 pip TP. So a 50 pip stop loss is like a $50 move. So if my entry is like at 34,570, my stop loss would be at 34,520. Let's say if I'm trying to do, so at the very max, I try to do 50 pips. For FX pairs, I do like a 25 pip to 30 pip stop loss, and then I do 50 pip or 60 pip TP. For gold, I try to do like a 30 pip stop loss and 60 pip TP, but sometimes I'll do at most a 50 pip stop loss and 100 pip TP. But that's the idea, right? So if you're looking for the entry on the 4 hour, that's an example. Now, if we go back right here to the 1 hour, you'll see this right here. So same thing, right? Break, continuation. Again, this was during market close. So ideally that. Now, if you have in this, so for example, here, we have this triple, by this time it was a triple SAR. So you have, sometimes you have a break, which is, now this is the important thing about waiting for confirmation, for those two candle confirmations, because in this instance, you see we had a break, but the next candle did not close, the continuation candle did not close above, right? So the continuation candle came back, reversed, and closed below. So again, if you have that instance, you want to do the same thing. You want to wait again for a break and continuation. So in this instance, this could have been a trade right here. Let's see what time this trade happened. This trade happened at 2 p.m. It was on a Friday. Again, you want to watch out for Fridays. Fridays is when the market, people are closing shop for the weekend. So personally, I don't trade on Fridays. For the Friday trades, I try to look for trades on Thursday afternoon so that I can ride them through Friday. So most of the times you won't find me trading on Friday, because I've lost a lot of accounts trading on Fridays, and then because I'm trying to catch a move that again I find happening on the new week open. So, but this is an example of a valid break. So you have this two candles. So this right here, if I put this right here, and then I can mark this up as break and continuation of a double Sarah's zone. This should be break. Perfect, right? So this is that one example of this. Let's see right there. Right, so hopefully you guys can see that this is this is triple. Actually, it's not even double. Right, so because you have break and then continuation, so you want to enter on that candle. Now, if when I'm entering, the other thing I ask myself, how far is my entry from the SARs I'm trading? So let's assume here I'm using a 50 pip stop loss, and then I'm using a 100 pip TP, right? So I'll ask, and you can see, right, this manipulation. I'll ask myself, how far are the SARs that I'm trading from my entry point? So in this instance, my entry point is 581, the SARs at around 553. So you can see if my stop loss is 50 pips, and I'm already entering, where I'm entering is 30 pips away from the SAR that I'm trading, you can see that my stop loss, the distance is about, 70% of my stop loss. So sometimes I will wait. I'm not going to enter on impulse. I'll wait for price to get back somewhere around the SARs, and then I'll go down to like the 5 minute and look for like a live 5 minute, and I can show you guys that. I'll probably go to the 5 minute and I'll look for the same thing. I'll look for like a break and continuation of a 5 minute SAR, like a 5 minute buy SAR zone. So I look at for a setup like this. If I was looking for a buy, I would look for 2 5 minute candles to close above a live. Because again, if you guys remember, I said that I don't extend the SARs on the 5 minute and I do not extend them on the daily. So if I find, like for example, in this instance, that by entering on impulse, even though yes, here the trade is valid, but you can see your stop loss, the SARs you're trading in relative to your entry area is like 70% of your stop loss, and you know that price can come back and retest the SARs you're trading. So you always want to weigh that. Are you willing to take the risk and enter on impulse, which again, it's a valid trade, right? Or do you want to wait for price to possibly come back to the SARs you're trading? So here you can see whether you entered on impulse or whether you waited for price to retrace the SARs you're trading, you possibly could have gotten faked out, right? And this is again why I don't like trading on Fridays, because on Fridays or during those manipulation hours I gave you all, because you'll find a lot of fake outs. But you can see here you could have gotten faked out whether you waited or you entered on impulse. Another way you can either choose to enter using, like, if for example you're risking 0.5% for this trade, you can enter with like 0.25% here and enter your other 0.25% down here. So in this instance, if we go over this trade, since we can go back to this day, because I told you guys about the limitations of TradingView. Here, the daily bias, if we look at our daily bias here, and that was September 1st, right here, you can see that our daily bias, or my daily bias for US30 was already bullish. So I was looking for buys on US30. And on that day, I think there was an entry on the 1 minute time frame. So you can see the update here was that we took a filler trade, again, a small trade. So it went up into profit like 50% and then came back to break even. Now, one thing to note here is that for this SAR strategy, we go for like a 1:2 risk to reward. And once you've achieved a 1:1 return, you go ahead and set break even. So you guys can see that here, if we go based off of that picture, we had already achieved a 1:1 here. So we were already up 50 pips in profit. So we set break even, and you can see the trade came out, unfortunately, and took us out. So that's why we set break even for that trade. Now, the other trade we took was on Tuesday, September, what was this? Tuesday, September 5th. So if I go back to the Discord, this was it, Tuesday, September 5th. You can see this entry was on the 5 minute time frame. And actually, I remember this trade. This trade was actually my fault. It was supposed to be on the 15 minute time frame. So that was my bad. So, but I can remember it, Tuesday, September 15th. And since this was on the 15 minute time frame, I'm sorry, Tuesday, September 4th. Since this was on the 15 minute time frame, so again, keep in mind, guys, the only time I extend my SAR, or I don't extend, is on the 5 minute and on the daily. So sometimes we'll find that we don't have any trades, because I do the live sessions every day. So we may not have the trades or trades every day based off of the 1 hour and 4 hour entries. So if I'm on the live session, I'll see what's going on the 15 minute time frame or on the 30 minute time frame. So on this particular day, September 5th, and this was let's see the time. The time was about 10 a.m. So you go here and we try to go back for Tuesday, September 5th. Hopefully they extend that far. Yes. Right here. Yeah, it was this day right here, about 10 a.m. Now, this was actually my fault because I thought, so keep in mind, I'm always looking for those at least double SARs, right? So if you can see this screenshot right here, I thought I'd changed the chart to the 15-minute time frame because you can see the entries. If I go down to the 5-minute, the chart was on the 5-minute, but I thought I was entering on the 15-minute. So let's see here, Tuesday, September 5th at about 10 a.m. Yeah, so this was it. So I looked at, what was that entry? About 10 a.m. right there. It's right there. So this double SARs right here. Now, in my mind, I had thought that this were what? In my mind, I thought that this were 15-minute entries. So keep in mind, on the 5-minute, I do not extend the line. So I thought that I had already switched to the 15-minute, but unfortunately, I had not. So, and you can see on the 15-minute, there was nothing on that day. So unfortunately, I thought that this was on the 15-minute and I called it on the live session. But again, since it was in the direction of bias, there was nothing really to be worried about. But the only thing is that when I realized that that was on the 15-minute time frame, or that was on the 5-minute time frame, this trade actually went up a little bit in profit. But unfortunately, I just said I'm closing early. So if we go right here to the 5-minute, you'll see that it was actually this one. Yeah, so I remember this day. We entered the trade somewhere around here. So we entered, let me see if I can find the entry. The entry was 5. I think I see that one. Yeah, so the entry was here. I think somewhere around here. We had a 50 pip stop loss and 100 pip TP. Now, here, the trade actually started off in profit, but even at this point, I'd already realized that I had entered on the wrong time frame, and I did mention it on the live stream. So during this part, when I saw price coming back down this way and knowing the time frame wasn't right, I had marked up this zone. So if you guys look at the live session, you'll see I marked up this low right here. And then I'd said that if we had a candle closing below here, I would close the trade early. And for this trade, nowadays I'm risking 0.75% per trade. I used to risk 0.5% per trade. So when this red candle closed below that low, I went ahead and let the people in the live session know that I'm closing early, and I closed early and only lost like 0.4% for this trade. But you can see the trade would have came back up and achieved the 1:1 risk to reward. So even before it hit, because of course it would have hit stop loss eventually, but it would have achieved a 1:1 risk to reward because it's 50 pips right there. So at this point, even if we had chosen to stay in the trade without exiting early, would have set break even after the trade achieved a 1:1, and we could have survived and gotten just taken out at break even. But I didn't want to risk the likelihood of me getting stopped out. Now, if this trade, if it was definitely on the 15-minute time frame, and again it was a valid trade, I normally let stop loss just either stop loss hit, break even, or full TP. If a trade is valid, right, I don't try to interfere with it. Because for me, what matters is if a trade is valid. The reason I chose to exit early on this trade right here is primarily due to the fact that the time frame that I thought I was entering the trade wasn't it. But this is the trade that day that we took, and unfortunately went out at negative 4 or minus 0.4% stop loss. And you guys can see here that I acknowledge that entry time frame was my fault, as I thought I was entering. Actually, I think it was supposed to be on the 30-minute, but I was on the 5-minute time frame. So stuff happens, and you just have to keep moving on. So those are the trades we've taken on the first week of September. You can see on Monday we didn't have any trades. Wednesday we had a break-even trade. Let's see what I remember. This trade, this was actually a gold trade. So on Wednesday, this was a gold trade. This trade right here, we were so up in profit. Unfortunately, it was right before news, so this was on the 5-minute time frame. Wednesday September 5th. So if we go Wednesday September 5th, now on Wednesday, let's see what my bias was. By Wednesday, this was the daily candle that closed on Wednesday. But before this daily candle closed as a bearish candle, my bias before, so keep in mind, my bias only changes if a daily candle closes. But by the time we were trading, it was the morning of this day. So this daily candle had not yet closed. So at this point, I was still bullish on gold because the last closure of an SAR level was bullish. So that morning, let me see if I can try and get back to where that trade was. So again, you guys can see it was on the 5-minute time frame. It was again during when we do the live session, so around 9:30 a.m. So I'll go to 9:30 a.m. on Wednesday, September 6th. So keep in mind, so guys, always remember, on the 5-minute, I do not extend. On the 5-minute and the daily time frames, I do not extend my SARs, especially if you extend them on the 5-minute. You normally have a lot of noise. So let me show you guys. Let me just clear out some of this. Let me show you guys right here. So if I were to extend my SARs on the 5-minute, look at all this noise right here. Right, I don't want to deal with this. So the lower the time frame you go, the more SARs you get. The higher the time frames you go, the lesser SARs you get. So I don't want to deal with that. I'm trying to get my charts to be a little less cluttery. No, right here. So let's see that trade Wednesday, September 5th. So we're here. Wednesday, September 5th. I'm sorry, Wednesday, September 6th. Yes, Wednesday, September 6th. At around market. Yes. So this was the trade right here. So it looks like that SAR went away, but you can see this is the time right here. So sometimes when you have heavy moves, even though an SAR has been established, sometimes if you have like heavy moves in this instance, they might be taken out. But you can see here on that particular day, because I'm pretty sure this is the same. Yeah, this is the same entry here. So we had an SAR right here. Now it was taken out due to this heavy candle, but you can see it was somewhere around here. Now what I was looking for here, again, same thing. All my entries are based, always keep that in mind. All my entries are based off of 2 candle closures. So I was looking at 2 candles to close above this 5-minute SAR that had been formed on the live session. So if you guys look at here, I'll try and recreate it because again, I mentioned to you guys that it does oh, my bad. It does let me use this for now. Let me just use that. So I was looking for 2 candles to close above that buy SAR right here. So we had this candle break. So remember, if you're bullish and your area of interest, so the area of interest would have been that green SAR right there. So since price was above it, you'd get a break and continuation entry. And we'll go over the other entry that I talked about. So I was looking for a break. So this candle broke, you want that candle to close. So remember, 2 candle closures. So that's the break candle, and this is the continuation candle. Now this was the entry right there. So I remember during this day, if you guys rewatch the live session, and this is gold. So remember, for gold, I do a 30 pip stop loss. I do a 60 pip TP. That's my 1:2. So volatility was so heavy, we got filled in, I think, up here. So what is our when we achieve a 1:1, we go ahead and set break even. So 1:1 would have been achieved here. So we were up price for this trade. We didn't even have any drawdown. So we were up about 40 pips because we were remaining with about 15 pips to achieve full TP. And again, this was before heavy news. We had heavy news at 10, so which is why you guys see that big candle. So this is the importance of break even. So once you achieve 1:1 with any of my strategies, go ahead and set break even. So you can see, and with this trade, we were risking 0.75%. 0.75%. By this time, we were already up 1%. But you can see here, when news happened, gold literally dropped heavily. So we were taking out a break even. I had mentioned this to the members who on the live stream that day. They can secure some profits here, especially if it's before heavy news. But we've had instances where we are at break even, and instead of getting taken out at break even, when even news happens, the trade shoots heavily into profit. So we've had that instance, even just actually, I think last week, the week before this, we had a big trade that we won that way. But anyway, so that was this trade right here that we, again, unfortunately ended up at break even. But right, this is only we're entering the second week of September. We have 3 more weeks to trade. So, we should get some nice trades during this week. And I'll, of course, do a recap, whether it's profitable, whether it's break even, whether it's losing trades. I'll do recaps of them. But hopefully you guys can see the idea, right? Use this to always have a daily bias. You don't have to use my strategies. I'm pretty sure, like ICT has, I think, the power of 3, how you can use that to find your daily bias. But always have a daily bias, because what that will give you, it will show you to look for trades in a specific direction. Because sometimes, I don't know about you guys, but sometimes when I try to look for both buys and sells, I mean, here I can definitely take both buys and sells, but sometimes when I go for both buys and sells, I find myself getting confused. So I just try to trade in one direction. So what else do you see here? Okay, I was going to go over the other entry now. So we have the break and continuation. Now the other entry is the test and rejection. So let me see if I can see a test and rejection of an SAR. Now, test and rejection is the opposite. Let's see what we can find. Okay, so here's the perfect example. So here I was bullish on this day because I've been bullish on US30. So here's an example of a break and retest and a test and rejection right here. So keep in mind, so hopefully you guys can see this break and retest. So let me put this right here. Okay, so always look for 2 candles. So you had this double SAR down here. So for you to trade this double SAR, there's 2 entries you could have gotten, right? Both for buys. Now, when price was below here, let me do a replay for you guys. I'm pointing with my arm. It's like you guys can see me pointing with my arm, and I actually have a cursor here. But anyway, here, let's go ahead and replay this. Now we have this zone right here. Let's go with the break and retest option. So for us to enter a break and retest, we've already gone over it. Now, since price right now is below this zone we've already marked up, and here I can tell it's the 1 hour double SAR, we would need, because the zone we are trading is above price. So if you're buying and the zone you're trading is above price, you would need a break and retest if you're buying. But if you're selling, for you to do a break and retest entry, or break and continuation, I'm sorry, I used to call it break and retest, but I don't use the term retest anymore. So it's those two candle confirmations on that particular time frame. If you're selling and you're trying to get a break and continuation entry, the zone you're trading would be below price, so that price can break and retest. So if I was to draw this, what we would be looking for here on this zone is a candle to break and close above. Then you want the next candle. Now it doesn't have to retest. Some candles retest, others do not. But you want the next candle also to close above this zone, whether it retests or not. And then that's your entry candle. The third candle is your entry candle for you to ride price up. So keep in mind, this is what we are looking for here as I replay. Now we have that candle right there. It broke and it closed above there. Now we're waiting for the next candle. Now you always want to wait for 2 consecutive candles. That's why patience is big in trading. Now that's your next candle right here. If this candle had closed below here, it would have invalidated your break and continuation. So at this point, when this candle closed, and these are the entries that I love. I love entries that, so you remember when I told you guys, always ask yourself, where am I entering relative to the SARs I'm trading? So here, I love when a candle, if it's a 4-hour, 1-hour candle, closes next to the SARs that I'm trading. So here you guys can see that it would have even given you like a 15 pip stop loss. But again, I tried to do like a generic 50 pip on US 30 because 50 pips is actually not a lot for US 30, right? But ideally, if you guys remember those rules we had, your stop loss should ideally be below either below the SCRs you're trading or below the high-low you're trading, the previous high-low. So here, even with the previous high-low, that would have given you like a 32, 33 pip stop loss. So let's assume here we just want to go with the 33 pip. And remember that, right? You want to do like a 1:2. So you could have gotten away with a 660 pip TP. Now let's see how the next candle did. So the next candle opened very bullish, actually came back and retested, and then the next candle went ahead straight into full TP. So you can see here, even if you chose to do below your the SARs, you could have gotten like a 16 pip stop loss. I don't recommend doing anything less than 30 pips on US 30. Even 30 pips to me is a bit risky. On US 30 I prefer 50 pips. So here, even though somebody was going for 50 pips stop loss and 100 pips TP, you can see that eventually you could have hit full TP, right? So this is an example of break and continuation of, and this would have been this is not a triple, this would have been a double, right? So same thing, if it was a sell, the opposite way. Next time, because this video is about an hour long, next time we'll do like or I'll see if I have time to do for sales. So you can see that is a break and continuation. Now the other entry you can have for a buy, so you guys can see when price broke above this zone. Now the other entry is a test and rejection. Now for a buy, for you to get a test and rejection, the zone has to be below where price is. Now, for example, you guys can see this zone right here. So same zone, test. So you want the first candle to test that zone and close above it if you're looking for a buy. So this candle gave you the test. So you can see it tested the double SAR and closed above it. Now you want the next candle to close above it. So it can reject. It doesn't have to reject through the whole both SARs. It just has to reject from that zone. So you can see this candle rejected. So this is a test and rejection. So hopefully you guys can see that. So these two candles gave you the break and continuation. These two candles gave you the test and rejection. So these two, break and continuation, these two, test and rejection. So if I were to note that here, I would, I'm trying to do this. then copy here. Okay, so this would be test and rejection of a double buy SAR zone in the direction of bias, right? So you guys can see now, for you to enter this, your entry for the test and rejection would have been there. And this is how, for you guys who followed me, a good amount of my trades are normally zero drawdown trades or little to no drawdown trades. So you can see again here, again, you ask yourself, this was the trade is valid. So ask yourself, how far are the SARs you're trading from your entry? So here, the entry would have been 34,460. The SARs you're trading are at 34,430. So that is about 30 pips away. So, right, you make a decision. And this is why I like going for like 500 pips, because here, even for 500 pips, the stop loss is way below the SARs you're trading. So you can see whether you chose to enter using the break and continuation, whether you chose to enter using the test and rejection entries, both would have hit full TP. Now, let's see for the other one. So break and continuation for a sell. Let's see an example of a break and continuation for a sell. So you can consider this a break and continuation. Again, right, I'm not trying to, I show both, trades that hit full TP and trades that hit stop loss. Like for me, the only thing that matters is the trade valid or not. Now here, for the sell, I can see, again, I'm not looking for the signals. I don't trade with the signals, so just ignore the signals for now. So here we have a double SAR. So keep in mind, the double SAR is below where price was. So let me replay this for you guys again. So if I'm replaying this, and let's see right here, what was my bias on Thursday, September 7th for gold? It was sell bias. Okay, perfect. So here, for me to enter any trade for US 30 here, I'm sorry, for gold right here, and price is above this, I would need 2 candles to close below this sell zone that I've identified, double sell SAR. So where is price? Price is above this zone. So this entry would have to be a break and continuation, right? Because for sells, break and continuation is below. For buys, break and continuation is above. So here, if we replay, we would need, perfect, right? A candle to close below here. I think that candle, it closed above. Okay, perfect. This next candle closed below. So this is possibly a break candle. So you want it closed already. We want the next candle to also what? Close below this zone right there. Okay. Now, here, if we were to sell the next candle, now the trade is valid, right? But we ask ourselves, if we want to do a 30 pip stop loss and 60 pip TP, always make sure that your stop loss is above the SARs you're trading. So for me here, yes, the trade would have been valid here to enter, but ask yourself, is your stop loss at the very least above the SARs you're trading? For this trade, no. So in this instance, you know what I would have done? I would have waited for price to come back above or to come back in this zone so that my stop loss can be protected in order for me to enter that trade. So I would wait for price to come back to this zone and then go down to the 5-minute time frame and look for 2 5-minute candle closures. You see like what happened here? Look for something like this. So you can see, so let's assume, right, it's always a decision. You don't have to do it, but keep in mind, right, if you enter on impulse, you just have to know the what can happen. So let's assume somebody entered on impulse here, right? Look at that. You could have just gotten faked out, stopped out easily. But let's assume you waited here. You waited, and let's say the 5-minute sell came somewhere around here, right? So let's keep going. So you see, right, you guys can see the importance of these SAR zones. Again, SAR stands for stop and reverse. It can stand for supply, or I'm sorry, support and resistance, but the basic one is stop and reverse. So right, always ask yourself, relative to my entry, how far are the SARs that I'm trading? is my stop loss above or below the SAR zones that I'm trading? If it's not, make a decision. Again, the trade can still be valid, but if you're going to enter on impulse, know that you're risking being stopped out, and then the trade can come back into profit, and then you start asking yourself or blaming yourself and saying, if only I waited. So you don't want to deal with the if onlys. So if it were me on this particular day, I wouldn't have waited. I wouldn't have entered on impulse. I would have waited for price to come around here. And if you guys are in the Discord, I normally send that out a lot. I normally say, yes, the trade is valid, but I'm waiting for price, and it's, I call it a Judas swing, right? Because if I'm expecting price to go down, but then I see possibility for manipulation, which is what a Judas swing can be, I will wait for the Judas swing to happen, and then I'll look to enter my trade during that manipulation. So let's say for me, I waited. You can see how far down did the trade go. 1920 to about 19, so 30 pips would have been 1917, 791. So you can see here, for me, this trade would have been at break even. So relative to somebody who got in on impulse or did not factor in where the stop loss was, for me, instead of getting stopped out like the other person did, I would have been at break even at this point. And guess what? For me, this trade I would have just gotten out or been taken out at break even. So you can see the importance of always asking yourself, okay, the trade is valid, but where is my stop loss relative, or where are the SARs that I'm trading relative to my entry, and how far of a stop loss would I need? So you can see one person here, as much as the trade was valid, one person would have gotten stopped out, the other person would have gotten taken out at break even. So you always want to ask yourself that question. Now that is the break and continuation of an SAR for a sell. Now what's the other entry we have is a test and rejection. So let's see if we can find a test and rejection. Now for a test and rejection to happen, when you're looking for sells, the sell zone would have to be above price. But for test and rejection for buys, the zones would have to be below price. So let us try and find a test and rejection. So we are trying to find a zone below where price rejected to the upside after it hit that zone. Now I know my bias changed. My bias for gold changed to a sell on Wednesday, so I can't really on the close of Wednesday. Close of Wednesday, yeah. So I know the example I gave you guys was on Thursday. Okay. So let's see. I don't know if we're going to get anything. So let's see on EU. On EU, because EU has been bearish for the bias has been bearish. Let's see. Where am I? Okay, let's ignore that daily bias for now. Let me just look for like a test and rejection entry, because I know I was literally like bullish on gold. We might not get one on. Okay, let me go here on the 15-minute, because I know the bias changed like just 2 days ago. So let me go on the 15-minute or 30-minute. So the idea is the same. The idea is the same whether it's on the 1 hour or 30 minutes. So I just want to show you guys like an actual example. So let's see here on the 15-minute time frame, we are looking for a test and rejection. So we want double SARs. Nope, no, I don't see any. I want to show you guys like a nice, a nice one that's easy to, you see, like the one we saw on US 30. So I'm trying to give you guys one that's not confusing. So price will need to be above. Okay, perfect. I see one here. So you guys can see this. So Let's ignore the time of day here because again, by this time the bias was bullish because this is Monday. The bias changed on Wednesday for me. But right, so this is on the 15-minute time frame. And we're going over test and rejection for sells. Now, we're looking for the same thing we saw for the buys, right? So we want a candle to test. Remember, if you're selling and you're using the test and rejection for entry, the zone is above you. So you would want a candle to test. So here also there's two entries because you can see here we also have break and continuation entry, right? But we've already gone over an example for break and continuation entry. So here we are going over an example for test and rejection. So let's let that candle play. It closed there. So in this instance, you see how this candle tested this zone and closed below it. So for the test and rejection, we've gotten our test candle. We need the next candle to reject. Now it doesn't have to retest this zone. We just need it to close below. But most of the times you'll see like a test of the closest SAR. Now let's see what the next candle did. The next candle attempted to break and close above. So keep in mind, if this candle had closed above this zone, the test and rejection would have been invalid, right? So here you had the test candle, the rejection candle attempted to close above, but it was rejected below. So you have your two candles. If I go ahead and highlight them, those two candles have given you test and rejection. So I'll go ahead and mark this up for you guys. So this is test and rejection of a double SAR sell zone. Now, I would put in the direction of daily bias, but again, right, since this is just an example I'm showing you guys, of course, by this time my daily bias was not bearish yet, so I'm not going to put that. So that's test and rejection of a double sell SAR zone. Now, in this instance, right, this is when you now come in, the trade is valid, then you ask yourself, okay, you draw your parameters. Again, remember, I champion like a 30 pip stop loss for gold, at least, at the very least, 30 pip stop loss for everything at the very least. But again, recommended stop loss for US30 is 50, for FX pairs 25 or 30, for gold 30 at the very least. Now here I'm asking myself, if I'm to take this sell, I need at the very least my stop loss to be above this SARs I'm trading, or above this previous high, so previous high low. So you can see the best thing I love about SARs, they can give you a very, very tight stop loss, which can improve your risk to reward. So here you can see you could have had literally like a six pip. I think this is a 6 pip stop, 6 pip stop. If you chose to be above, no, even if you chose to be above those SARs, let's just assume, again, I wouldn't recommend you to have like a 3 pip. This is 3 pips, 3.5 pips, right? So let's assume somebody chose to do like a 3.5 pip stop. That's a very tight stop. I don't even think. So 3.5 pip stops. So you can see for you, if you did like a 3.5 pip stop and like a 60 pip TP, that is like a 1:20 risk to reward right there. I don't know how this would have gone through, but let's see. Okay, but you can see you could have gotten faked out, right? But you could have already gotten like a 1:1 or something at the very least and said break even. But I don't recommend anybody to be trading with a 3 pip stop on gold. But if you went for the previous high, right? So keep in mind, so long as your trader has achieved a 30 pip stop loss, because here you can see if we did a 30 pip stop loss, the stop loss would be all the way above here, and you can see it would have been a nice threshold. You can come below, you can bring it a bit below and achieve a better R2R. So here, this one, if it's above the previous high, could have done a 6 pip stop and given you like a 1:10 right here, risk to reward. So if it was above the previous high and you kept playing this out, that would have been amazing. 1:10 risk to reward right there. think it would have gone to full TP because yeah, would have been full TP right there. But this is an but for me, for you, if you guys have seen me, I'm right. I don't think I'm that at that level yet for doing like a 6 pip stop on something. But anyway, you can see the best thing I love with SARs is that they can give you a easy or a nice risk to reward. So I hope you guys saw that, like how this was a test and rejection entry of a double SAR sell zone. So right, if for test and rejection for cells, the zone has to be above you. Now hopefully that makes sense. And going over, right, I'll be doing small reviews of this, but most of the times I'll just be doing the reviews of the actual trades we take. And I guess I can write this down, like what a test and rejection for buys are, or what test and rejection for sells are, so that the next time, because if we have like trades every day of the week, I wouldn't be able to be recapping like exactly every time what is a test and rejection for buy, what is a test and rejection for sell, because that can take the recap into like 2 or 3 hours. But hopefully that makes sense. If you guys have any questions or if you guys are interested, down below in the description, you'll find 2 links. The first link is the link directly to join our Discord, totally for free. You can come in and we normally talk about pretty much everything, matters related to trading or just other matters in life in general, or whether you're struggling in trading, you can join us. If you're interested in the indicators, we have information about the indicators in there, right? The results from traders in here now, right? And you don't have to be using our strategies, right? You can come in there and say that, oh, I found this strategy to be profitable, and you can let us know what it is and we can all view it. So right, these are some of the returns. So, and we post both wins and losses. So for example, this is me, right? You know, people post both wins, both losses, and I think that's the importance of having like an open community where you're not shy of saying that you need help, and you also have people who are in there and they're willing to be of help and of service to you. So feel free to join us. The other link will take you to this spreadsheet that we have right here. So in this spreadsheet is where we track the returns for this for the trades we take or I take during the live session, or for the official trades that I send in the Discord. But this will be a weekly thing where I'll be recapping what's going on, or what I've been doing, or what we've been doing in the week, the trades we've been taking. But until next time, I'll see you guys maybe in another video during this upcoming week. But for the next recap will be the next weekend. So next Saturday, which will be, what's next Saturday? Next Saturday is the 16th of September. So hoping to have a profitable week. So wishing you guys a massively profitable week, and I will catch you guys in the next video. See you guys. Peace.